Hey everyone, I'm your host Tom Shaughnessy and welcome back to Chain Reaction, a research-driven podcast that's a part of Delphi Digital. If you're not on Delphi's research portal, you're missing out on the critical analysis read by the top minds in the crypto space, so be sure to check it out. One quick housekeeping item, nothing said on this podcast is a solicitation to buy or sell any security or token or to make any financial decisions. Hey guys, I also wanted to tell you about ZenLedger, the best tax software for cryptocurrency investors and accountants. It's fast and easy to use, and you can get all of your crypto transactions in one place so you can trade smarter and optimize your taxes. ZenLedger offers 24/7 customer support by phone, email, or chat to help you get your taxes done stress-free, and it comes with a 100% money-back guarantee because they know you'll love it. ZenLedger is giving an exclusive 15% discount to our listeners when you use coupon code CHAIN15. Go to zenledger.io, linked in the show notes below, to get started and get your taxes done fast. With that, let's jump into the episode. Hey everyone, welcome back to the podcast. Today, I'm super excited to have on Arthur Breitman, who's the founder of Tezos. Arthur, how's it going?
Good. How are you?
Good. I just got done playing Risk with my roommates, so alliances were formed, and some people aren't friends anymore. But happy other than that.
How long?
Happens.
How long did that take?
Longer than I thought. It was like a 2.5 hour game, surprisingly.
Oh, I think I always confuse Risk and diplomacy, and I think they're kind of similar in style, but I can never tell them apart.
Yeah, me either. It's this was one of the older versions of Risk, or newer versions. I forgot which one, but always fun. But it's great to have you on. For those who don't know you, it would be great if you could give your 30-second elevator pitch. It's probably redundant at this point.
Well, I would say the reason I'm on today is co-founding Tezos, which is a it's a software project. It's a blockchain. It's a cryptocurrency. It's all three. I prior to being involved in that, I worked in robotics. I worked at Waymo for a while. I worked in finance and high frequency trading. So I have a bit of an eclectic background before getting into this space.
That's incredible. I have so many questions for you. I don't know where to start. We got a lot on Twitter. I can't name everyone by name, but one of the good questions we got was, what has changed most in your thinking since the beginning of Tezos that it came as a surprise or, got you excited? I guess what's changed the most?
Interesting. So there's one thing that I thought was very important at the beginning of Tezos, which I think is still important, but like a lot less so. I used to think that you really needed to have most of your features directly embedded in the protocol, because if you were just building them on top without them being canonical, then somehow it would be much harder for them to take off because there wouldn't be a clear canonical example. So to make this concrete, let's say you're building something like a domain name system. Do you need to build it directly in your protocol, or do you need to build it on top as a smart contract? Let's say you're building a stable coin. Does it need to be baked in the protocol, or does it need to be built in a smart contract? And so on and so forth. And I was under the impression that it would be hard for these to take off if they weren't directly a part of the protocol, if they were just some entry in some database in some corner of the ledger. And I think empirically that has been refuted. I think there's still benefits in having them be at the protocol level in terms of efficiency, in terms of canonicity, but it's not as important as I once thought it was. So I guess that would be one important point.
So would that be like the kind of the Ethereum route today, where everything is not really built on the protocol layer, but built on top?
Yeah, so very much so in the idea of, I think that Ethereum said that Ethereum has no feature. And like I said, I wouldn't say I am 100% all the way into saying no features. None at all. But, maybe if I started at maybe like 90, 80%, everything needs to be baked into the protocol directly, as opposed to built on the application, as opposed to be being built directly as a smart contract. I would say maybe like now I would be like a 40% or a 50%.
What key feature do you think out of the ones you list, like what did you think about that Tezos should have at the base layer that you now think shouldn't be? Like, is it that stable coin idea? Like what exactly are you thinking through there?
Prediction markets, for example, would be one. Prediction markets, stable coins. Stable coins, I'm actually like more on the fence. I think there's benefits in having them directly at the protocol level, but prediction markets and domain name systems, for example.
Would that line of thinking play into Bitcoin a bit? I mean, because Bitcoin, doesn't have anything really built at the protocol layer other than being money, and people are hoping to build on top, but it's obviously very hard to build on top. I guess, how do you think through less features on the protocol layer as it relates to Bitcoin?
Well, Bitcoin doesn't have either. It doesn't have a protocol that you can easily amend to introduce new features, and it doesn't, and it's hard to extend and build on top of it. So you can't really do either. There's some things you can do. I would say Bitcoin is it's expressive enough that you can get something like Lightning, but that is pretty much pushing it. It's like I would say something like Lightning is pushing Bitcoin to its limit in terms of what it can do in level 2. And in fact, that's also why you had to have like a soft fork to have a good support of Lightning. It's really pushing it to its limits. I think there's a lot to gain by being more extendable.
So this is a good leeway into, a lot of people debate the fat protocol thesis. If things should be built on top, where does value accrue? I think a lot of this has to go back into arguments about token econ and value accrual. Where do you think you stand on that argument on the fat protocol thesis as it relates to, Bitcoin, ETH, Tezos? Do things have to be built on top? How exactly do you think through that?
Yeah, it's good. So there's an ambiguity about the term fat protocol. I think it designates two things. One thing, and when generally I talk about fat protocol, I really talk about this idea of saying like, hey, instead of having like many layers, in an application layer that's really built on top of the protocol, you can build this directly inside the protocol. So the protocol in some sense is fat. So that's what we were just talking about. But also I think that the fat protocol refers to these VC Tezos that value capture happen at the protocol level, as opposed to within companies which are building on top of the of cryptocurrencies. And in the first instance, you're talking about some things that's about technical design. How do you design your protocol? Where do you design features, and so on and so forth. And in the second one, it's more of a VC thesis about what value capture looks like. Realistically, if we're looking at the companies which have been built, I think the only successful companies really that we've seen by and large have been exchanges, chain analytics company, and then a few exceptions like maybe some remittance companies. There's always there's always a few gems, but if you look broadly speaking, it's clear that protocols have captured more values than companies so far. So just from like a pure empirical perspective, I think it's been somewhat validated.
Do you think that it's been validated and it will extend into the future? Like, I'm just trying to think through, like, everything is built on Ethereum today, or a lot of is in the space, a lot of experiments. So people are kind of assuming that that's going to continue and that can't change at all. But to the flip side, there's other protocols, specifically like Tezos, that have things that ETH wants that could enable developers to build different things, formally verified things. I guess, how do you think through competition there between the two?
Well, this opens a new thought that I like to add, which is that again, in this fat protocol thing, part of this thinking as well, for some people were thinking, in these applications, there will be companies, but the value will be captured by the protocol they create. So you'll have company creating protocols and then building around this protocol, and the protocol will capture the value. And that part of the thesis I really don't buy. So and this is what gave you a wave of app coins. So companies saying, for example, we're going to be the new YouTube or decentralized Twitter or what have you, and then we'll have a token, and hoping that they're going to build some value around this token, and then offer services around it. I don't really buy the app coin thesis because a lot of the time, especially if you're building open source and if you're building a decentralized ecosystem, having a token is basically like having a toll booth in an open field. And so that doesn't really work. I think that, again, all of these things, can be copied, they can be forked. And so the only way that you can have something that functions is essentially if it functions as money. If you have something as strong as a network effect of store value and moneyness, I think if you're not shooting for that, if it's just like, oh, this will be the token associated with this ecosystem, I don't think that works.
So for a lot of layer ones that have projects built on top, people would probably push back and say, hey Arthur, if Maker and synthetics and all these things are built on a protocol, they'll all have to pay fees to the layer one, and then those fees will accrue to miners, and that will drive the value of the native token. How do you think through that on the value accrual basis? Because I know you don't agree with the AppCoin thesis, or do you just not need that at all anyway?
No, I mean, it's possible that, first of all, I think the argument for fees is very weak in proof of work. It's much stronger in proof of stake. And the difference primarily is that, okay, so let's say you have someone who really wants to use your proof of work protocol, like Ethereum. And so they have to pay a lot of fees. And so they're going to have to buy the token in order to pay the fees. Because by default the fees are paid in this token, so they're going to have to buy this token, and then they're going to spend it when they sell the fees. And so in the interim period where they buy it and they spend it, they're going to be holding it, which can raise the value of Ethereum, for example, if they're doing this on Ethereum. But it's a short period of time. It's based essentially on transaction cost. Really, the idea is that you have some people who say, well, I might need to do some transaction. And so therefore, since I might need to do some transaction, I'm going to keep a small balance in Ether, right? Because I may need to be spending it as transaction. But that amount that you leave is very small. And really, the amount that matters here is not how much you're spending in transaction fees. It's how much uncertainty you're willing to you're looking to spend. So if you think of money, the reason people have money is because they don't know what they might spend money. They might spend things on in the future. If I know for sure in the future I'm going to want a brick, I buy the brick now, or I enter into a contract to get the brick. If I don't know what I'm going to want, I keep some money. And so if I don't know what transaction I might spend on the Ethereum network, I don't want to have to acquire my ETH at the last time, I keep some ETH on hand, and then I can spend it in transaction. But then that gets into the hand of the miner. Miner sell it to something else. So it's fairly weak link. If you're doing, and also I don't even have to do this. Like in principle, I can pay a miner in any currency. I don't have to pay it in ETH. It's just more convenient because it's part of the protocol. But really out of band, you could pay the miner in what have you. And in fact, I've seen proposals within Ethereum to do in-band payments directly in ERC20 tokens, like do DAI payments in band and so on and so forth. I don't think that's very. So I don't think you that captures value, like they say in a thesis. If you're doing proof of stake, it's very different, because in proof of stake, owning tokens give you the right to create blocks, and having the right to create blocks gives you the right to receive fees. And so that, I think, makes it a lot more interesting, because all of a sudden now, when fees are being spent on the network, regardless of the currency in which they're being spent, regardless if they're spent in a cryptocurrency, in some other token, if they're paid by like wire payments through a bank and so on and so forth. Now it's interesting because as a participant in the system, you have the right to create blocks. And so by creating this block and by taking part in the network, you get to participate in that.
Got it. So just so I'm understanding correctly, and I don't want to botch this because there's a lot to unpack there and it's super interesting. What you're saying is that the thesis on fees of applications built on top doesn't hold up in proof of work, but it holds up in proof of stake because users actually have a use case for the native asset?
It's not that they have a use case for the native asset. It's that the native assets. So basically, if in proof of work, when people spend a lot of transaction fees, it goes into the pocket of miners. And so miners increase the hash rate. And so when you have a lot of fees being spent on a proof of work network, the first order effect is that you're going to raise hash rate. Now, it could be that because of that, you might say like, because hash rate is now higher, I can reduce issuance. So it's not that there's no connection, but you would have to have the ability to tune issuance based on how much miners are getting from fees, which I don't think anyone is actually doing right now.
Got it. Okay.
On the other hand, you have this tuning happen automatically when you're doing proof of stake, because in proof of stake you're not you're not subsidizing hash rate by having more transaction. Essentially, when you're paying transaction fees in proof of stake, it's almost equivalent as if they were burned, as opposed to going on to support hash rate.
Got it. Okay, that makes a lot more sense.
But a transaction fee, you can look at a transaction fee as being paid to a random staker. And so that's equivalent to the transaction fee being burned. But that worked. The nice thing is that it works regardless of how it's being paid.
Arthur, that's super interesting. And my other question on this thread, not to switch gears a little bit, was how you think about interoperability in the space. So everybody's talking about bridges between Bitcoin, ETH, Tezos. Tezos just launched some form of Bitcoin on its network, and there's a lot of projects focused on this. And then there's a lot of discussion on where value accrues and things like that. How do you think about interoperability at a high level?
People made a huge deal of interoperability in 2018 and of 2017. I've always been a bit of a skeptic in terms of the value of interop. I remain a bit of a skeptic. I don't think it's the worst thing in the world to necessarily have. Although I do think it's a benefit to have other tokens tokenized on your platform. I think it's oftentimes not good to be tokenized on someone else's platform. So the reason for that is the minute you start treating these cryptocurrencies as mere representation of value, and you divorce them from their platform, and you move them onto a platform which has its own native store of value, it's kind of I think it's kind of a slippery slope. I see some people saying like, we'll see Bitcoin and Ethereum, for example, and the entire Bitcoin will move to Ethereum, and the Bitcoin shell in itself will be abandoned, and that's just like what it will be. And I don't believe this for a second, because if this were to happen, progressively you'd see Bitcoin lose its value. Like, it has to be on its own native chain. You have to be, I would say that your token has to be a sovereign where it lives, and that's on its own chain. Otherwise, you can't. You can't maintain, I would say, the mystique that lets you be a cryptocurrency, like a real cryptocurrency that people value. I don't think that happens if you're just some tokenized asset from some other chain.
Arthur, that's interesting. So, I mean, there's just so many projects in the space, though, that are focused on this, right? Like Cosmos and Polkadot, and a lot of what they sell is the ability to, build wildly new applications because you can connect chains with different features and technical differences. I never really necessarily bought that, but do you think that that's like a possibility, or do you not buy it?
No, I think it's possible. It's not what I want to spend most of my thinking off. If someone builds this for Tezos, I think that's great. But personally, I wouldn't I wouldn't focus my own effort on something like this personally, because I don't quite see it. So the way I'm thinking of something like Cosmos is that it may feel an interesting niche. So you had a lot of applications which have been built on Ethereum, which don't really need to be on a large censorship-resistant public blockchain. And really, the reason they're there is because they want to have a token and they want to be somewhat decentralized, but decentralization and censorship resistance is not super important to them. And for a lot of these people, if you tell them like, hey, you know what, you can have your own chain, not have to worry about gas, not have to worry about platform risk, not have to worry about any of that. Just write your own chain and find like 4 or 5 people to run it, and you'll be fine. That is very, very compelling. And then you tell them on top of that, you'll have wallets that will work for it. And if people want to exchange your assets with other assets, they can move your asset to other chain. I think that's like I think that feels a very important niche for a lot of application, and so you might see a lot of that. And if the only state you can port between chain is balances, I think that's 99% of the state that people want to move. It's not very complex states that people want to move between chains. So that solves a problem for a lot of projects. But the question I would have is, ultimately, I'm not sure that these projects are going to be valuable in the long run, because for some of them you have a bit of a decentralization theater, and so I don't, if you're fine with just being on a chain with 4 or 5 validators that you've built, then maybe you're fine being on Amazon AWS, and that's fine for a lot of projects. If you're not, then maybe you do need to be on a large censorship resistance public blockchain. And the other thing is that, so let's say you build this thing, then you've built a cool technology, but you haven't really built something that can has have a shot at being a global form of money. And again, I think it's hard to survive if you're not shooting for moneyness.
You bring up a lot of good points there. I don't know which to go into first. So I'll tackle the decentralization question. You mentioned decentralization theater. A lot of projects don't actually need like to be built on Ethereum. They don't need that redundancy or that decentral level of decentralization. Do you think that the majority of these projects, I mean, obviously probably the majority will fail, but how exactly do you figure out which ones need this level of decentralization? Like, don't you need to have this experimentation phase to figure that out?
I don't know. So if you're censorship resistant, so first of all, the decentralization is about censorship resistance, right? Decentralization for decentralization's sake is not that interesting. You are decentralized because it makes it easy. It makes you more resilient. It makes you unstoppable. It makes you hard to censor. So the question is, who's trying to censor you? And if you don't have a good answer to that question, that's suspicious. And the answer to that question doesn't have to be like, oh, the government is going to crack down on this. There's a lot of situations where you might be the one trying to censor yourself. For example, if you're not, if you have a company product and you want to convince your customer that your company is not going to control the ecosystem that you're creating, so that they should feel free to build content, because we'll have a lot of very successful media companies where the content has been created by users. So if you want to convince your users that you're not going to screw with them, that you will not censor them, then you do need censorship resistance from yourself. So there are instances where you can have subtle answers to that question, but I do see a lot of cases where you don't really have good answers. And I've heard a counter argument, which is to say, like, well, maybe you don't need to be on a public blockchain, but it's just convenience. The blockchain is there, it works. You have a lot of you have an ecosystem. You have a lot of actors who are already on this chain talking to each other, and so in the same way that the internet was built so that it could withstand nuclear war, it doesn't mean that you should only create websites if you need a platform for your website that can withstand nuclear war. You build your website on the internet because it's there and it's convenient and it works. And maybe you can say the same thing about blockchains. The difficulty here is that there is still a lot of it's still perilous to deploy on blockchain. It's still expensive. It's still slow. And so you really need to have a very compelling thesis to build on a blockchain today, as opposed to building a centralized system.
I feel like your point on, or your question to ask every project who's trying to censor you, if every project had to ask that, it would have cleaned up a lot of projects.
Yeah.
It's a tough one for teams to answer. And so, I mean, when you're thinking about decentralization, though, like, how do you think, though, 50 or 100 years in the future? Like, how do we know who's trying to censor us? Like, people that are trying to censor us now might not censor us now, may want to in the future, right? Like, we're trying to build these things for the long term.
Yeah, no, absolutely, that's true. You don't necessarily know in advance where you're going to be censored, but everything is cost benefit analysis. If you're paying like this huge cost to be in a blockchain, if you're like paying large transaction fees, and you have to have deploy your code once and not be able to easily update it, and have all this platform risk, and have all of these like weird UX and so on and so forth, like there's a cost to deploying something on a blockchain. And so sure, maybe someone's going to want to censor you in the future, but you have to like weigh the probability that's going to happen, and the probabilities that you're going and that your defense against this will be actually strong enough versus the the very, very real cost you're going to face in doing this. And in theory, maybe we'll see like sharded blockchains, which will have all this charge, or you'll have something like Polkadot, where you run your own parachain and it's all it's all shared security, and so it doesn't matter. You don't pay any cost. You run your application just on your own. But we haven't seen any of this live yet, and so I would reserve some judgment on this.
Yeah, I was going to ask you what you think makes for a good blockchain-based app versus a bad one, and it sounds like one of your first filters is, does this actually need to be decentralized?
Yeah, and I would say, like, does it need to be censorship resistance? I would say decentralization is a means to an end. Like, if we could snap our finger and the blockchain was central, the blockchain was safe, and didn't have any rent, or rent extraction, and wasn't censorable, then you wouldn't care about decentralization. You care about decentralization insofar as it gives you those properties.
So, I mean, I guess when I'm thinking about this, like people might bring up examples of blockchains that aren't as decentralized, but say offer higher throughput. And one thing might be, hey, why don't you just build on EOS, like higher throughput, and it's more, more centralized, but who cares, right? But I feel like people don't want to innovate on centralized chains, even though their app doesn't need to be decentralized, because they lose the ethos, they lose this idea of protection. I just feel like they lose the magic, even though, to your point, they might not need that magic. So I guess, how do you think through that? Because like innovation is happening on the decentralized chains, even though it really doesn't have to.
I know. I think you nail it. I think a lot of it is the magic. I think a lot of it is the ideology. A lot of these I think a lot of these applications are being built by people who are ideological, who are passionate about decentralized platforms and censorship-resistant platform. And maybe even if the app that they're building doesn't need as much censorship resistance as being a global form of money, for example, they still see the appeal of the platform, and that's fine. That's a fine reason to build on it.
No, that's fair enough. And so, talking about decentralization, proof of stake is obviously a hot topic. ETH 2.0 has goals. You guys have been proof of stake from the start, which is incredible. Decred's out there. There's a lot of new layer ones launching that are proof of stake or moving to it. I'm wondering your view of like the current proof of stake landscape. It's a question from Manib at Blockstack, actually, because there obviously are a lot of differences here and a lot to talk about. I guess the most important things are the extremes. What do you think makes or breaks a bad proof of stake network? Because there's just so many out there at this point.
Yeah, so I mean, we can go through the. I think I think clearly. I'm very happy that Tezos is proof of stake and non proof of work. If given a choice between proof of work and proof of stakes, I will pick proof of stake, no questions. But I can also go into the weaknesses of proof of stake directly. So one of the weaknesses is that you have, in some sense, a closed system. So even if you have thousands and thousands initially, I think Tezos started with 32,000 accounts, which there's no reason to create multiple accounts. So we can assume that it's probably about this number of participants. The only way is that you can get Tez is basically buy it from someone who owns it or already own it and like process some blocks. Whereas in proof of work, in theory, there's this myth that you can go into a cabin in the wood and then just like build a kiln, bootstrap the entire tech stack, build an ASIC, and then start mining by yourself some tokens, and then you'll be able to create, forge Bitcoins or Ethereum in proof of work without like anyone's permission. But so that's a kind of like mocking version of it. But in reality, it is true that the supply chain that can produce miners or that can let you participate in a proof of work system is bigger than the set of people who might be able to sell it to you. And so there's this like openness that you're missing. And so one of the characteristics that's very important in proof of stake is to have a very wide dissemination of the cryptocurrency itself. Because if you have some sort of large concentration or only a few people, you basically just have like a very, very closed system. And I think that plagued early proof of stake effort, like NXT, for example, was plagued with this idea that it was controlled by only a few people.
It's hard to get there, though, right? I mean, because you want max distribution, but you also don't want your token to be worthless.
Yep, absolutely. And that is a challenge of launching because if you want to launch a proof of work network, you don't need to do in theory you don't need to do anything. You just publish you publish a paper, you mine your first block, and that's it. People mine after it, and you have your distribution mechanism. If you need to have how do you get an initial allocation for a proof of stake network? And that's a much more difficult problem than the problem of doing proof of work.
Do you think that, in line with the distribution idea, do you think that ETH2 has a benefit because it has the distribution of ETH1 holders that could potentially move over? Or do you think that I shouldn't think of that along what you're saying as a benefit?
I mean, if it depends a benefit over whom. I don't think it's a benefit over Tezos because I think Tezos has already a pretty wide user base, but it's a benefit over some new protocols that hasn't launched yet, for example.
Yeah, there's just, I mean, I write about this for Delphi. There's just so many new layer ones launching. I just have such an issue figuring out, how everybody's going to be able to coexist. Like, I just don't get how a new layer one with, 50 mil in VC money that's not even at mainnet is going to compete with incumbents that, have all the mind share. How do you think through that? Like, do you agree, disagree, or do you leave room open for innovation there?
No, I think that I mean, there's always room for innovation. It doesn't mean there's room for competition because a lot of innovation can be copied, and so
I love that line. Yeah.
and so a lot of this, a lot of the things that launched have really cool tech, but in general, they'll have one interesting aspect. Like, oh, this is a really neat way of doing consensus, or like, oh, you really you've really done some great engineering to optimize the throughput. Maybe people can think of the projects behind this, but if you are but that's not enough. Like the things that cannot really be replicated is community essentially. That's that's the actual moat, and it's going to be very very hard for these projects to build. You want to have a mythology. You want to have like community spirit, engagement. That's really really hard to replicate.
Hey guys, I also wanted to tell you about ZenLedger, the best tax software for cryptocurrency investors and accountants. It's fast and easy to use, and you can get all of your crypto transactions in one place so you can trade smarter and optimize your taxes. ZenLedger offers 24/7 customer support by phone, email, or chat to help you get your taxes done stress-free, and it comes with a 100% money-back guarantee because they know you'll love it. ZenLedger is giving an exclusive 15% discount to our listeners when you use coupon code CHAIN15. Go to zenledger.io, linked in the show notes below, to get started and get your taxes done fast. Why do you think that VCs in the space, and I know you're not specifically VC, but I'm wondering your take, why do you think they spend so much time investing in layer ones versus potentially investing in projects built on you guys, built on ETH, built on Bitcoin? Like, why do you think they're potentially wasting their time and their LP's money here?
Well, it's a fat protocol thesis. Like, they've tried. If you look, they've tried to invest in. So VCs tried to invest in a bunch of like companies that are going to build on Bitcoin, and they didn't pan out. Like the only one that ended up panned out were like the Chainalysis and the Coinbases, and like those are the one which have been really profitable for VCs. But they realized that didn't. Those were exceptions and not the rule. And so as an investment, I would say that a lot of these companies have been dogs for the VCs, unfortunately. And I think the problem is that I think they think of layer one as like technology plays, and they're not. They think of these as like investing in technology companies, and it is not at all what it's like. And I think that's why they're going to have a bit of a surprise there.
Yeah, no, I agree with you there. And you brought up community as the most important aspect. I couldn't agree more there. And I want to know what makes for a great community. I mean, I feel like a lot of it goes to the ethos on the community side, and then a lot of it goes to funding on the dev side. But I mean, you could really screw this up. Like EOS has $3 billion and there's nothing built on it. So how do you kind of think through, building a community and funding the developers to build on it as well?
Yeah, I don't think you should. I don't think you should fund development, and certainly not fund applications on top of layer one. That's not going to. That doesn't work because you're just going to be adversely selected. If you go and say like, hey, free money for anyone who builds on the platform, that really doesn't work because you're going to get a lot of people who are interested in just free money and not necessarily people who write good applications. So the way to do it is investing into developer tooling, like have really, really excellent developer tools that people want to build on their platform because it's so great and so convenient. That's infrastructure, providing the roads. That's the thing that pans out. It's kind of like building a railroad so that all of a sudden it's like, oh, cool, the train gets in town now. You can do interesting things.
Arthur, I literally just tweeted that the other day. That foundation should build infrastructure, not apps. I couldn't agree more. Is that what you guys are like? Is that what the Tezos Foundation is focused on? I mean, you guys have the Tezos Foundation has a significant amount of money,
Yeah.
and they're allocating it very well. Like it's a certain amount of money. It's you guys aren't overspending. But is the Tezos Foundation focused on building that infrastructure out?
I don't know what their plans are. They do have. I mean, I do see some stuff coming out. There's some. I know that they're like some of their grantees are building some infrastructure. I see some of that. I see TQ building some infrastructure things, Cryptonomic building some infrastructure things. Some of them for nomadic. So we do see some of that, but I don't know exactly what their plans are.
Yeah, I'm close with TQ Group in New York. They're doing some great things on you guys. I could give them a shout out. And the I guess the reason I agree with you is that not only the adverse selection thing, but if a foundation builds the infrastructure or the core developers build the infrastructure, then anybody can build the applications built on top.
Yeah. That's that's the thing that I think that's the best. That's the most reasonable thing you can do, as opposed to trying to directly attract the applications.
For sure, for sure. So just switching gears a little bit, because we're running through a lot. Nick Carter asked about how you think through supply of a protocol. And I guess it's a really good question that ties into the argument on, competition to be a money, store of value, have a max supply cap. How exactly do you think through these things? I know there's a lot to unpack, but feel free to take whichever's most interesting.
Yeah, so I mulled this over for a while, knowing something was wrong, but the way people talked about supply, but not knowing exactly how to explain how I was thinking about it. And it ended up condensing into a large blog post. It's on my website, ex.rs. And there's two parts. The first part of that blog post is like, how do you enforce supply cap? And the other part, and the other part of the blog post is like, okay, but what are supply caps? How do we think about supply? And I like to walk people through some thought experiments, because you'll find that people have very binary views about supply, but you can present them with scenarios where clearly they should say like, oh, there's no difference. And then you tweak the scenario, and you can convince people there's a continuum. So for example, imagine that you started with Bitcoin. Bitcoin has a cap of 21 million coin. And people say like, oh, well, Bitcoin has value because it's scarce, because there's a maximum number of Bitcoin. And you say, okay, so imagine that you had Bitcoin, instead of Bitcoin being 21 million coin, it's 21 million coin. And then after that, you have one Satoshi that's created every year for eternity. Like, does that change anything? And clearly, like, any sane person like looks at this and say like, okay, no, it doesn't change anything, because like that's such a tiny amount that over like centuries, just one Satoshi every year is not going to change anything. Like, okay. Now imagine that you say, all right, so you have Bitcoin 21 million coin, but after 1,000 years, after the 21 million coin, you're going to create 1 trillion coin. Does that change anything? And again, I would argue that no, it doesn't actually change. It doesn't actually change that much, because it's so far in the future. So if you want to have an account of like how to understand supply, it needs to take into account time. If you're not taking time into account, you're not thinking about this right. And it needs to take into account the fact that it's not about like a finite amount versus an infinite amount. It's about when you have it. And so the reason, going back to the reason that people hold money, the classical economic explanation for holding money is because it's liquidity preference. You want to have something that you can trade against other things. So let's say there's a pandemic coming, and you're like, oh my, there's a pandemic coming. I don't know what might happen. I might lose my job. I might have to pay medical bills. I might need to help some family members. I don't know what I'm going to need. So what you'll do is that you'll take some of your assets. Maybe you have investments. Maybe you own, some stocks. Maybe you have some collectibles, whatever. And you decide like, I'm going to sell those now and have some cash, because these things are less liquid than cash. It takes some time to sell them. I need to find a buyer, and so on and so forth. So you sell those assets and you have some cash, and now you sit on this cash and you wait until you have, maybe you have a problem, and then you can trade this cash. So you hold cash because it's the most liquid means of exchange. But there's a cost to that, which is unlike those other investments. Cash doesn't have yield. It's not you're not lending it out. You're holding it. You're not investing it into a risky venture. So, there's a cost to holding cash, but there's also, it has to have value, otherwise you wouldn't do it. And the value is what is called a convenience yield. So the convenience yield is like the utility you derive from holding cash as opposed to something else. It's not just cash. I think it works for other store of values, right? So if you're holding gold, for example, there's utility in holding physical gold, which is that, hey, if things really get somehow really bad, or if I need some cash, gold is fairly liquid. I could trade it for something else. Even in the midst of a financial crisis, it might retain its value, and so on and so forth. So there's a value for holding physical gold. I would say the same thing for Bitcoin. And in fact, you can see it if you look at Bitcoin future and Bitcoin spot. You will see that the market tells you that people prefer holding Bitcoin to holding a Bitcoin future. You look at the difference between the two, it gives you a rate, and that rate is the convenience yield, is the value it has to actually own the stuff, as opposed to owning a promise on the stuff. Okay, so we have a convenience yield. And now the convenience yield basically unlocks the puzzle for supply. You shouldn't be looking at you shouldn't be summing, doing the arithmetic sum of the future supply. You should discount it by the convenience yield. That's what it's about. So it doesn't matter if a trillion year from now more coins might be created, for example, because they're not here right now, and so you benefit right now from holding this asset because right now it is scarce. It has a finite supply at this point in time. So obviously, if you have hyperinflation, right? If you have a ton of inflation happening in a short period of time, then that's really bad, because you may have some convenience yield in the sense that the hyperinflating money is still the one that's accepted at the store, but you have a lot of cost because you have to pay inflation. And so, hyperinflation happens when inflation becomes much higher than the convenience yield. And if inflation is higher than your convenience yield, then basically you don't want to hold cash anymore. You're just going to get rid of your cash, which is going to drive down the value of the cash, which is going to drive up the inflation, which is going to drive down your convenience yield. So you have this spiral of hyperinflation. But if you're not in this regime, inflation sucks, but it doesn't make the money worth less either. It makes the money worth less. It doesn't make it worth zero. So that there's an infinite supply for US dollars or euros or yen or what have you, and that it's centrally controlled and you own all of this. But at the end of the day, I'm sure a lot of listeners have fiat currency in their wallets in some form, and the reason for why is convenience. So when you look at supply, you have to adjust for convenience. That's one thing. And the other thing you need to adjust for is for proof of stake currencies. You need to be adjusting for proof of stake rewards, because the proof of stake rewards, so like, you stake some coins, you create a block, you earn a reward. It's purely inflationary reward. And so it's funny because people look at it two different ways. Some people will say like, oh, well, proof of stake has all this inflation. They have this permanent inflation. It's really bad. It's really inflationary. And then other people will say, oh, proof of stake is so great. Look, you get more tokens just by staking. It's like this free income stream. That's magic. And both are wrong, because the reason it's not the same thing as inflation is because you're getting the staking reward. And the reason the staking reward is not like some free magic income stream is precisely because it comes from inflation. It's a neutral mechanism. It's a mechanism to redistribute ledger balances from people who are not actively helping in the security of the network to people who are actively helping in the security of the network. That's what it does. And the fact that it's implemented as a reward as opposed to being implemented as a burn is an implementation detail. You could have proof of stake working in the same way, where no one earns a reward, but people who don't validate blocks end up losing cryptocurrency. So if you build it that way, I think for some people it might be psychologically unpleasant, but if you build it that way, you get something that, at least on the first order from economic principle, is equivalent to the second one, but which would have a finite supply. And so the question is like, what should dictate design? And I think ultimately you want your design to be dictated by what makes the most sense in terms of implementation. But it's an interesting consideration to see what are the psychological effects, or even sometimes tax consideration in how these things are built.
Arthur, it's a fascinating thought experiment. I mean, it's really cool to think about. Like, would I care if Bitcoin had one Satoshi a year, or a million in 100 years? I'm not sure. But to your point, I doubt it. But I guess the question for you is, what are the implications of this? Like, and are people smart enough to understand this? Because, like, let's say that a supply cap doesn't matter. Like, are the masses going to understand that? And if so, does it really matter then? Because supply cap doesn't matter to any protocol. Like, if it doesn't matter to Bitcoin, it doesn't matter to Tezos. Why don't people just stick with Bitcoin?
Right. So I think everyone can understand. Well, I think most people can understand. The problem, as often, is not whether or not people can understand it, is whether they have the time. Most people have busy lives, and they don't want to get into the details. And so if you tell them it has a supply cap, they understand that immediately. It's easy to draw the implications. If you start telling them about, hey, here's why you hold money, and here's convenience yield, and so on and so forth, then then they're like, well, you know what, I have shit to do. So sorry, this sounds potentially interesting, but
I'll see you later.
Yeah, exactly. But the counter to that's a strong argument for supply caps. But the counter to that is that a lot of people, by the time they adopt something like this, they don't adopt it because they're convinced by any type of argument. They adopt it because, hey, that's what the merchants are taking, and because it just like solves a problem for them. They will see that, hey, if I buy something online with this, it's cheaper, or hey, this has been a pretty good store of value in case of trouble. And so that's, I think, ultimately people are convinced by track record and empirical evidence, as opposed to analytical arguments. And I think that's what will matter.
Yeah, no, I agree. And the other part of this, though, is it comes down, like in your post, to security, right? So I think, and I didn't have time to read your article yet, but I'm parsing through it. Basically, Bitcoin's obviously going to have a question of if transaction fees could sustain the network after block rewards end. To your point, if supply cap doesn't matter, you could have issuance forever as long as it's okay. And, similar to Tezos, so you should switch. But it's kind of a bit circular because this is like 100 years out, and, who cares, right? So I guess my question for you is, while I agree with you, and I think you're right, it's tough to move from Bitcoin to Tezos because it is so far out. It is an extreme event.
Yeah, but like I don't think that would be the main reason someone might want to use Tezos or use Bitcoin. I think it's just like one of the aspect of the design. There's many things. The fact that you have a smart contract language that can support a lot more extensions, like that you can build more applications on top of it, that you can progressively make it faster, that you can add privacy preserving transactions. The fact that you can have all of this extendability and improvement in the protocol is, I think, what's interesting. And having a good monetary policy, I think, is part of that. But yeah, I don't think anyone is going to. I don't think many people are going to switch from Bitcoin because they're going to say like, "Oh my God, Bitcoin is facing this big problem I don't think it's in 100 years. Like, Bitcoin is facing this big problem in 20 years. Whatever shall we do?" Yeah, it won't come down to that. But it's also a long haul. It's also it's a marathon. Like right now, the adoption of any cryptocurrency has been extremely low, including
Bitcoin.
No,
it is low. And not to harp on this question, but it's an interesting one. Let's argue that supply cap doesn't matter, but let's say that Bitcoin's transaction fees can support the network in the future. Even though you might be right with your argument, does it matter if the network is still secure? Is that the right question here? I'm just trying to think through it.
Well, I mean, there's two reasons why transaction fees are a problem in the future. Even if the amount of transaction fees is sufficient, there are some problem in the in how you create blocks. There's a good paper by Arthur Breitman on the topic. So it's not even like if people are paying enough fees. It's also the way fees are being paid, which is which basically creates some incentive to if all you're getting is the fees, sometimes you're better off just trying to steal the transaction from the block beneath you than trying to extend the chain. So that's part of the issue. But again, even if in theory you could adopt this, you could adopt the YOLO strategy and say like, you know what, Tezos has a supply cap. It will be reached in 50 years. So there, check the box, supply cap. I don't think it's. I think it's better to have a more intellectually honest position. But if it's possible to just say like, sure, you know what, supply cap. It's a self-amendable protocol. We can cross that bridge when you get there. But I also don't have a lot of evidence that somehow this is like blocking people. I don't think there are a lot of people out there who might be using Bitcoin and not another cryptocurrency because the first one has like a certain is based on the supply cap and the other one is not. I think there's some people who say that, but I think it's mostly rationalization.
No, for sure. And a lot of what you're discussing would involve, the discussion of changes to a protocol, right? Governance, on-chain, off-chain, and a lot of that also plays into a protocol social contract. Gregory Rocco wrote a great post on your guys's a social contract. Jesus written about Bitcoin social contract. And basically it's a tough conversation, but basically social contract is basically what makes up a protocol. For Bitcoin, it's censorship resistance, inflation resistance, take your pick, right? How do you think through governance on Tezos or other protocols, but while also trying to maintain the social contract of the protocol?
Yeah, so the idea is that Tezos has more of a meta-social contract. The meta-social contract of Tezos is that the changes to the protocol are going to be the outcome of a governance process. That's that's essentially the social contract. So you don't have to have. So you're not relying on like a specific goal or rule set. You're saying, hey, we assume that the initial governance system is good enough that is going to drive the project in the right direction. It's kind of like if you're walking down a gradient on some like surface, you want to be in the right basin of attraction so that you're not going to be like stuck on the wrong path. And so as long as your initial governance system is reasonable enough, then you're going to have something that evolves, because in principle people will not want to change if the change is bad for them. And so overall, people are going to tend to favor good decisions, and then good decisions accrue, and good decisions can apply to governance itself. And so progressively you get a system like this. So instead of ossifying the protocol itself and saying that's going to be the protocol, you ossify the meta protocol and you say like, hey, this is how disputes over direction of the protocol are resolved.
Understood. So a lot of this comes down to changes. You said how a protocol evolves. Off-chain governance, Bitcoin, Ethereum is really scrappy. It's hard, but it has a strong community and there's checks and balances. It makes sense on some respects, but it's also so messy where I'm not sure people are able to understand what the changes are, how they're made, the coordination issues. I feel like they spend so much time talking about how it's done or confused that they don't actually know what's changing. With you guys, it's different because it's a very clean upgrade process. It happens on chain, but you do lose. Some people may feel it's a little bit more centralized. How do you think through those differences?
So first of all, I don't think that having your upgrade on chain basically absolves you from the problem that you've been describing. Because at the end of the day, protocol upgrades are very complex pieces of code. They require a lot of understanding of the code base. They require a lot of time to think through, and so that's time that people don't necessarily have. So they're not always able to analyze it by themselves. So that's true for if your process is based on forks, and it's true if your process is based on on-chain governance. So I'm not sure that I don't think that's what it does. What it really does is that it prevents a like Keynesian beauty contest phenomenon where somehow you fork because you know everyone else is forking and you don't want to be left on an orphan branch. And I think that's what too often can happen with hard forks. It's like, hey, we know the hard fork is happening, so I will have to go along with it. If you don't, there's no penalty for opposing a change with on-chain governance. If you say I don't like this, there's no, you're not getting slashed. You're not getting penalized. You're not like ending up on an orphan chain that no one uses. And so you have a way for people to express their opinion clearly, and not only do you have a way, but also it's mandatory in the sense of like this change will not happen unless people actually voice directly whether or not they approve or oppose a change. So I think of the on-chain process as like a ratification mechanism. You still have to have this robust off-chain governance and off-chain discussion. It doesn't, the on-chain governance is not a substitution for off-chain governance and discussion. It's a ratification process.
Yeah, it's crazy how expensive some of those situations have become. Roger Ver, I mean, Calvin Arl with Bitcoin, like all of Bitcoin's children. It just seems like, I mean, those are just relevant examples of people that disagreed or wanted to change,
Yeah.
and most of them left, and their value of their holdings and their new asset is just worthless or worth a lot less now.
Yeah. I mean, it's really tough to pull off a fork. There's very, very few successful examples. Monero is one, because I think Monero is technically a fork of should we call it? Was it Bytecoin? I think they forked of Bytecoin, but not from they didn't fork the chain. They forked the code base. And Bitcoin SV versus Bitcoin Cash. They have they have managed to basically like split the baby as opposed to just having one be irrelevant. But these are exceptions. I think it's really, really hard to justify the existence of a fork. And what's interesting is some people look at this and say like, well, see, hard forks are not a problem. No value is lost because one of the branch ends up like being worth very, very little. And I think that misses a point. The problem is that the function that chooses between the two branch doesn't have necessarily to do with technical merits. It doesn't have necessarily to do with a lot of factors. It has to do with legitimacy. It has to do with what branch people perceive as, the branch.
Yeah, that's interesting. I mean, it's tough to figure that out in real time, though, right? Like, what if one has a huge social following and the other has a huge social following? I mean, then you just get two viable branches, right?
Yes, but I think it's very hard to have two viable branches because these people, these things are substitutes.
Yeah, no, that's a good point. Plus,
and the
how
one
big
with the
would
the one with the more network effect has a big advantage over the other one. So
yeah, no, it does.
the reason the two might basically like split the baby is only if there's a lot of uncertainty over which one might end up being successful and which one might not.
No, that's totally fair, and not to. It's super interesting. Just to change gears because I want to get these questions in before you go.
Yeah.
One thing I like to think about is like social figureheads in the space. Like, I love Ethereum, I love everything built, but one of my concerns is I'm not sure if Vitalik can ever leave. Like, how do you think through social figureheads in the space and when they're able to, or if they're ever able to leave?
Well, first of all, I don't think it's a good idea, both for the projects and for the figureheads to be figurehead. I don't wish on anyone being a figurehead. I think it sounds exhausting. So I probably wouldn't recommend it.
And Arthur, I'm not discounting the work of all the teams who build these protocols. I mean, there's thousands of extremely smart people. Just to get to the question I asked pretty bluntly.
Yeah, absolutely. I think it's best to do. I think it's best to do without, of course. If you're trying to build a social movement that that can reach billions of people, any single person is going to be polarizing. And if you have something that's too polarizing, I think early on being polarizing can be useful because you're you attract it can attract people. But if you want to scale beyond that, you need to lose a little bit of flavor over time. If you're if you're too much of an exotic dish in some sense, you're not going to be palatable to a very, very large audience. And having a figurehead, I think, prevents you from having a very, very broad reach, because you want everyone to be able to identify with a project, to make it their own in some sense, and you can't really do that if the project is attached to a at least in people's mind, to a person.
How do you think these massive founders? I mean, I'm sure you've probably thought about this yourself, but how do you feel about that though? When you have a potentially large monetary stake, it's something you've spent years on, it's something you've built. How do you separate that in your mind from, hey, I built this, but it has to evolve by the community, versus, hey, I built this and it should be mine. It should be built in my, my image. How do you Like, how do you think leaders of these massive projects think through that? Because obviously the ones that let the communities evolve, the protocols win versus a dictatorship, but it's just hard, I think, for the founders to grasp that.
Yeah, I mean, if they really want to control these things, they should be into a different industry, right? Like, what's the point of trying to build something that's decentralized, especially, or something that's self-amending? If you look at the Tezos papers, they're all about basically avoiding the lack of any type of central control. And so, if you are, if you want things done exactly like your way in a very precise way, then don't decentralize. Keep make your own projects, or do it in a different field. It doesn't make a whole lot of sense to go into this area of development if that's your preference.
Yeah, no, you're totally right there. And a lot of differences in the projects, I feel like, are coming from the idea of second mover advantage. So a lot of new layer ones in the space say, oh, we don't care if somebody has this or that. We could just copy it in our project and run it and attract a community. How do you feel about second mover advantage for some of these protocols? Because it sounds like a fallacy to me, but I'm wondering what you think.
No, I think it's a real thing. The thing is, it's not. Sometimes it's not glamorous. No one wants to say like, no one wants to go and say like, oh, we're not as smart as all these other people innovating, but we can always copy it and it will be okay. It sounds very meek.
It does.
Everyone wants to be like, no, I'm a category leader. But second mover has worked for a lot of companies, and first mover has worked for a lot of companies. So like second mover has worked great for Microsoft. It's huge. It's a huge, extremely successful company, and they've been second movers in many cases. So it can work. I think what's important is having a credible way of being a second mover. Because if you just say like, oh, I'll just do this, right? Okay, then do it. It actually takes some. It actually takes a lot of things that need to go right for you to be able to do this. First of all, there needs to be enough people interested in actually like replicating this feature. Then you need to have some mechanism by which they're going to be put on the chain, and so on and so forth. And Tezos does have this by default. You have a mechanism of inflation funding to make sure that this type of thing can happen. So like you mentioned, there's like a well-endowed foundation that exists for the Tezos project, which like distributes grants and can fund these things. But you don't want to be dependent on that. And having a mechanism for inflation funding makes you not dependent on that, which I think is important. And the other thing is you want to have a mechanism for changing the protocol, which again, Tezos has. So if you're Tezos, as a chain, you can make the claims that, hey, I'm always going to be within some bound, within some like finite bound of the state of the art. And that's a powerful statement, because it's not, this is not like an electronic gadget where you always want to have the latest version, and then if there's a new version, you just switch to the new version. If you're trying to be, again, a currency store of value, if you're trying to be something like this, you need to be able to have a story about stability. You need to have a story about like, hey, here's why this is here to stay. And it's more convincing to say this is here to stay because it's always going to be close to the state of the art without necessarily like taking crazy technological risk, is a more compelling argument that, hey, we just built something and it happens that for the next 6 months we're going to be the most advanced technology platform that there is. That's not very compelling.
No, I totally understand that. I guess the question though is like, do you think that the crypto sphere is too, moving by the second and too blocking out the rest of the world? Like, I'm trying to think through like if MakerDAO or Synthetics was built on Tezos or Solana or something else where maybe it had faster throughput, like that's obviously a benefit, right? But everyone in crypto says, oh, it's not, it's got to be built here. Do you think that we're just crypto people in general are just viewing the world in too narrow of a lens when we're comparing these things?
I'm not sure what the connection with a narrow lens is. Like for you mentioned Solana and a lot of people still building. So I think we need to see a bunch of layer one projects, like well-funded layer one projects, fail before we see a lot of people start getting interested into building on other protocols. One of my hope for Tezos is that you have some team comes up with like a great way of doing like better throughput, better consensus algorithm, and their first reflex today is, oh, we're going to launch a new layer one blockchain. And that's still the case because I think for them, that's what made the most business sense. I think in the next few years, we'll see that that doesn't work as a business model, launching a layer one chain. And we'll see people get more interested in saying like, okay, but I am interested in core development. Can I, can I make a business out of doing core development on some other platform? And that's where I think Tezos can shine in. But it's going to take a few like big layer one project to fail in a business sense before we see this happen.
Yeah, it's interesting to think about. Like, I agree with you that a lot of the layer ones will fail, but like from an outside perspective, it would make a lot more sense for some of the projects built on existing layer ones to switch to other ones which may have better features for their protocol, but it just probably won't happen, right? I mean, like I don't think anybody's going to go and build like a viable synthetics on Tron, even though I think they just copy and pasted it recently. But do you understand like kind of what I'm getting?
Yeah,
Like I don't know.
the thing is that I heard about Tron that like opened my eyes is that if you think of it as a decentralized blockchain, it like, well, not a decentralized blockchain. If you think of it as that, it's maddening. If you think of it as a big media Chinese M&A company, the world makes more sense. So
Yeah, and a successful media company. I mean, they crush
yeah.
it.
But
Yeah.
again, a lot of the success of Tron comes from the ability of like spending 200 million on BitTorrent and creating a token that has nothing to do with it, that just like has a name, and then selling it. And you can only do that for so long because at some point people stop being interested because they're like, okay, well, why would I get this BitTorrent token? I can use BitTorrent without it. So really, what's the point? And so that's kind of like self-limiting after a while. But yeah, they've been copying a lot of stuff, and it's not like I don't like the ethos of it. I don't think it's I don't like the ideology of it. But like in terms of copying everything down to like they copied the IPFS logo for the Tron logo. But at least
I was laughing so hard when I saw that.
at least they have a strategy. You know what I mean? It's like it's not incoherent. Like they are executing on a specific strategy, and I don't know if it'll pan out for them, but at least I like that they have some direction.
Yeah, no, it's funny to think about them as a media company. When you think in that lens, they're just insanely successful, right?
Yeah.
When you think about other protocols, like we were talking about Tron for a bit. So when you think about Asia, do you think that there could be geographical winners to this game? Like, I don't know much about Asia, the culture in Asia, especially in China. I know it's very hard to work there. I know Ethereum really hasn't pierced their walls as well. How do you think through like geographical winners in the space?
I think it's possible. So I generally push in the direction of maximalism by saying like, look, all of these platforms compete with each other, and it's winner take all. I really push in this direction. One of my personality characteristic is that I am very rarely 100% over things. I'm all about gradation, and so I don't think we end up with a world with like a single token. But I do think you have a very strong power law, and if you can think of like what can create what niche can exist for different projects, I think basically there are two. One is a throughput decentralization trade-off. So like slightly more centralized chains with faster throughput, and the other one is geographic, because historically, even like even companies or projects or protocols with very strong network effect have sometimes not been able to prevent geographic pockets. So geography is still very strong. So if we see this, it will be, if we see differences, they may be geographic. I would agree with that.
I really like that narrative. I mean, do you think that
Like even
the
gold and
world
silver had like, I think silver was more prevalent in Asia than gold historically. So even historically over millennia, you still had like some of this geographic difference. Internet flattens the world, but there are still language barriers, political barriers, and so cultural barriers. So it's not it's not obvious that they will be broken down by protocols.
Have you spent a lot of time in Asia, Arthur? I wasn't sure before I asked my next question.
No, I don't think I have. I mean, I've visited the region. I've been to a few countries in Southeast Asia, but the cumulative time I've spent in Asia in my life is probably like a couple months.
Yeah, no, I was going to ask how much real news you think from Asia actually makes it back over to the East. I just feel like it's such a different culture that, especially us in the US, like we don't really understand. Like Multicoin just invested in DeForce despite Ethereum having everything on DeFi on it. The thesis being that there's totally different values over there. There's totally different culture. There's different desires, different needs. And I feel like that's lost on people in the East, especially in the US.
Yeah, I don't know anything
Or
about.
sorry, in the West. I mean, yeah.
Yeah, no, I don't know anything about D4, so I I don't really know. I don't. I'm not sure I agree with the thesis of multicoin in general about this space. I think they're very very focused on throughput, and they're very very focused on applications. And I think I'm more focused on the story, the mythology, a lot of this, the moneyness, all of these other aspects, which are not pure technological plays.
Yeah, that's a fair point. I mean, a lot of the space spends so much time on the technical differences of, say, throughput and centralization. They don't really spend a lot of time on the philosophical points you bring up that really kind of resonate with a worldview. Do you know what I mean?
Yeah, yeah. I
It's
think I
tough.
think I think philosophy is very important because if all you're saying is like, oh, I'm building this like really really neat tool, and people are going to use this tool to do a lot of things. They're going to host a lot of applications and so on and so forth. Then it makes sense to treat this purely as a technology problem. But I don't think that's the case.
Yeah, it's funny you bring that up. I feel like a lot of successful VCs in the space spend a lot of time on the philosophy and less time on the technicals because I feel like you lose the community in the technicals and you lose what the stuff is actually built for and where people actually are because you kind of want to figure out where you think they should be.
Mhm.
But I guess we'll see there. So Arthur, switching gears a little bit,
Yep.
the future, what keeps you up at night? What scares the hell out of you? Is it an AI future? What exactly are you afraid of with the world ahead? This might
Uh,
play into
yeah.
the current COVID crisis too. But
I mean, it depends at what scale. The problem is like I used to be like this. I used to be this contrarian where people would say like, I worry about this and I worry about this, and I would say like, no, really, what you should worry about is pandemics. And now, now I can't be like, now I can't be interesting in cocktail conversations about it because everyone is going to be like, well, duh. So, I think,
yeah,
uh, and the thing is like in some sense we're lucky with this one because um, we don't quite know what the CFR is going to be on this COVID-19. The lowest numbers, you like the lowest credible numbers are probably around like 0.5%. The highest credible numbers are around like 4%, 4 or 5%. So it's a wide range. If I had to guess, my guess would be probably around 1%. So it's very lethal. It's like it's at a point of lethality where it's a tragedy, and when the economy is stopped, and it's a financial crisis, and so on and so forth. But in some sense, it's the mortality of a virus like this is rolling a die. It's not like it was not much less likely that a virus like this emerges, which has 10% or 20% mortality than 1% mortality. There is a correlation between how much a virus spreads and how much it kills you. And in the sense of like it would be hard for this virus to be a lot more lethal and at the same time like leave you asymptomatic for so long and like going around spreading the virus. That's true. But it's still possible if you do like a plot chart of like virus, like historical viruses and how contagious they are and how much and how many people they kill, you will see the trade-off between the two. But it's not like, there's still a lot of noise. So we could totally have ended up with a version of COVID-19 that was 10 times more deadly, and then you'd have a much, much bigger problem. So in some sense, I hope that this pandemic is going to inoculate the world against much deadlier pandemic. And then you get into like designer pandemic, because the problem is that if you're looking at the world in terms of some of the real like catastrophic risk you can have, you have nuclear weapons. So for most of the 20th centuries, it was a risk that Russia and the US would end up the Soviet Union and the US would end up exchanging a bunch of atomic bombs, and then you kill millions and millions of people in mutually assured destruction. And fortunately, it didn't happen. But I think one of the reasons it didn't happen is that there were only a few parties involved in making this decision, and those parties can coordinate, and it can be, and there can be some checks and balances. Now imagine, and it's also the case that you can't build an atomic bomb in your garage. Enriching uranium is extremely difficult. You need to, let alone mining, but like enrichment is a very hard technological process. You don't just do it at home. Engineering viruses is something that can be done at home. It's not. I don't think it's done today. I think there's very few people who know how to do this. But in 10, 20 years, we're going to move in a direction where people can actually engineer plagues in their garage. And here's the problem: is you cannot easily police billions of people who might be doing this at home. And I don't think I don't think it's feasible. And I certainly wouldn't like the part of the risk is A, that someone does this, or B, that governments decide to have a completely totalitarian police state in order to prevent this from possibly happening. So solution is investing massively in the ability to respond to pandemics as opposed to anything else. Like we need to have much better antivirals, much faster way of producing vaccines, much better way of protecting people against pandemics. So that's one of the things that do worry me about. But again, it sounds like I'm just being fashionable right now, but I've been worrying about pandemics for a long time. Other things that I worry about in general, I worry about the growing role of government in the interaction with technology. So historically, you have different checks on government. They are, I would say, constitutional checks. I don't just mean the US. I mean constitutional in the sense of like, governments have bodies which have their own rules, and a lot of governments have self-limiting rules. And some, one of the ways that governments have self-limiting is having open elections, for example, is one method in which you can limit the power of government, because if they start being too drunk on power, you can vote them out. Other ways of limiting government is having an independent judiciary branch which can hold the executive accountable. So you have different ways of like limiting the power of government. But historically, one of the things that has really limited the power of government is the limitation of the physical world, in the sense of like the government cannot just pass and costlessly enforce any law that it wants. If tomorrow, for example, the government wanted to ban people from saying hello to each other over the phone or in any way, it would be very hard for them to do that. They wouldn't be able to enforce it. It would be bad law, but they would also be not able to enforce it. Technology is making all of these things easier. And when we get to the point where government has the means and the technology to enforce any laws that it wants, you're losing an important check on the power of governance. And there are some people, like I would say, a lot of like law and order people think that somehow the existing constitutional checks that you have are enough. They're saying like, oh, it's okay. You don't have to worry about bad laws because, people are elected and you can always amend the Constitution. And you have all of these mechanisms which are very, very weak and extremely slow, which are going to like help prevent abuse of government power. And that's extremely scary if you think that's a sufficient check on the power of government. It's not. Like the government having the ability to know everything and do everything is extremely scary. Now they're really bad at doing things in general, and so that's an important check on the power of government. But with technology, even no matter how inefficient you are and how bad you are, at some point you still manage to get things done, and that's extremely scary. I also think there's been a weakening of the ideology against government power. I think over time people have become more accepting of it, and I find that worrying.
So Arthur, a lot of on that point, a lot of people argue the difference between small and large government, but I think what you're saying is that it doesn't matter if the government has, X employees or X squared employees. What matters is their power and how they can use technology at scale to enforce laws and police people.
Yep.
Got it. Got
And
it.
I don't know what the solution might be to have much better forms of government, much better checks and balances. But I'm not holding my breath on this one. I don't think it's going to happen. I think honestly, the most a lot of governments are still beholden to public opinion in a large sense, and so I think that public opinion is good, is a good check and balance that we have. The problem is that a lot of the public opinion is shaped by the media, and we have a media that is extremely, at least in the US, the media is massively pro-government. Whether it's left-wing or right-wing media, it's basically extremely polarized towards government solution to problems, and that's a worry because you have a lot of media controlling the narrative and controlling the narrative towards more and more control.
So the COVID crisis, though, kind of plays into your point on the government. It's hard to argue, like, the government is obviously getting more power because everybody has to look for them to solve this issue. But the US really botched its early response. And in foreign countries, especially in Asia, I feel like people are going to just look to the government and solidify their view that, hey, the government saved me. I'm beholden to them forever. How do you think our reaction here to the COVID virus has been going? Like, what are your thoughts on what's going to happen after?
I'm pessimistic because and again, if you look at the media response in the US, you'll have the left wing media that for a while told you that, oh, look at these crazy tech bros, who don't know anything and who are worried about the virus. How stupid they are. By the way, break up all the tech monopolies.
Yeah,
and
exactly.
and then you have the right wing media now who's saying like, oh, Trump did such a great job in preventing the crisis, and like he obviously botched this. And what's so funny to me is that like this pandemic could have been so on brand for Trump. Like I don't like I'm personally an open border type of guy. I don't like right wing populism or left wing populism. But let's let's just say that let's just step into his shoes. He sees this thing happening. What could he do? He could say like, this is why we have to worry about China. This is why I've been tough about the border. This is why we need to bring manufacturing at home. I'm closing the border. I'm taking aggressive action. This is why you need someone decisive like me who's going to do things and so on and so forth. He could totally play into it. If you're a right-wing populist and you have like a global pandemic that happens, it's like, gift from heaven in terms of politics. And instead of that, like for a month, he's on TV saying like, oh, there's not that many people. Oh, what's really important is not to spook the stock market. Like, that is crazy bad. And despite that, there's already a narrative that, oh, he's done great. He's done great. It was all the WHO. It was all China. And to be sure, like, yes, China did probably like lie and hide a lot of information about this for a little while. But that doesn't account for the entire months where it was obvious that this thing was spreading and was contagious and was lethal. And, the FDA was not approving tests coming from abroad. And insofar as the government, as the U.S. government has had a good response, it has been when it has gotten out of the way. That's most of that. That's the main thing that they've done. It's like, oh, I guess we'll suspend all these FDA rules. Like, well, I thought those rules were great. I thought that made people healthier. It's funny, but when you have an actual problem, you realize that these actually are making people killing people. And I don't know that this lesson is going to be learned. Unfortunately, I don't know that this lesson is going to be learned if because people will draw the lesson from reading the press, and they will and they'll draw the lesson that we need to have a third government agency that oversees all the medical stuff. I guess one way that people learn is like when things are really bad. So if you're president and the economy is very bad, people might vote you out, and they're not necessarily like looking at causality. Is just that, well, things are bad, so people must be doing a bad job. And so in some sense, I guess people will probably, if a lot of people die, I think people will think less of government in general, because they'll say like, well, I'm not supposed to be perturbed in my life by all these crazy things happening. So I suppose that the people in charge are not doing a good job. So I think overall we'll see a bit more of a crisis in I think we'll see less faith in government overall as an outcome of this than more. But not by much.
I definitely agree with you, Arthur. I'm just trying to think through the implications. So, like, let's say people in the US rally around the idea that Trump didn't handle it well. And I think he did not handle it well at all, regardless of people's political views. But what you're saying is that people won't learn, and so nothing will really change. But I feel like confidence is starting to strike, because this is the first time I think in a while that every country has faced a global issue. that's the same issue. It's the same enemy.
Yeah, and maybe existing political leaders may pay the price. I think it's more of like what people will favor in terms of policy going forward is what I worry about. I do think that I do worry about people being less open to globalization, for example, even though it's like it is a complete red herring. So there is idea that if our borders are open, if then somehow like pandemics are more of a problem, and that's completely bollocks, because unless you have unless your border is closed 100%, you're not going to prevent someone coming in and spreading the virus. All it takes is a couple super spreader going through. So if you're not going to go, and if you have, either you have a border that's 100% closed, or you might as well have open borders in terms of like preventing pandemics. But people are going to use this as an argument to, like, instead of having like 90% closed borders, going to 95% closed borders. And I think that's a terrible waste. You're going to get like all the economic and freedom costs of this, and none of the public health benefits.
Yeah, I love the way that you think in extremes, Arthur. It really brings it down. It's easy to understand. It's digestible. What do you think about their economic response, though? I think like Naval tweeted out recently that the number of people dying that are under 45 or younger, whatever, is a very small percent. Meanwhile, we're all locked down, economies are shut down, people aren't earning money, and this might drive people to really support something like universal basic income. Do you think that our response generally is worth the economic result? Like, everyone's staying home, but will there be businesses to open up next week, next month?
Yeah. So first of all, not all of this has to do with the lockdown, because if you look at Sweden, you look at their movie theater numbers. No one's going to the movie theaters. Restaurants are empty. You can also see it on OpenTable, for example. If you look at the bookings on OpenTable, they started going down way before the lockdown started. So a lot of people are saying like, oh, the economy is forced to be shut down, but that's not completely true. Like, a lot of people are just staying home out of self-preservation. I also don't think that just giving people, if everyone is forced to stay home, giving people a bunch of money is not going to solve the problem, because you do need to have things being produced. And if you have a supply shock and demand shock at the same time, just giving money to people is not going to solve the issue. I hope we don't see a UBI out of this. A lot of UBI proponents say like, oh, wouldn't it be great to do this because we could replace all welfare with a UBI, and it would be so much like neater and simpler. And of course, it's not what's going to happen. The day you see a UBI, it's just going to be printed money that's going to be given on top of everything else. And so that's and I think it's a political slippery slope, because the minute you have that, you'll have people wanting to increase it, and it's just extremely onerous. And in order to being able to collect that money, the government is going to build a bigger and bigger panopticon. It's going to build a bigger and bigger control of the economy, and you end up having something that's fairly ruinous, both for wealth and individual liberties. So I'm pretty pessimistic about that. I also don't think that, right now, if you still have like food supply chain working, and so making sure that people are able to get food and giving them money, that's one thing. But like thinking that somehow having a UBI solves the problem is wrong. Like, you do need people working and producing stuff. If you're not producing things, it doesn't matter how much money you're printing.
So I'm guessing you're not a fan of the government bailing out airlines, banks, etc. Like, as for companies, like, are you of the opinion that let free market capitalism win out, let these companies fail, let new investors buy the assets, restart the businesses? That's what bankruptcy is for, to create leaner companies to handle risk.
I'll repeat the trope, but a thing that needs to be understood is that even if an airline goes bankrupt, it doesn't mean the planes are going to stop to fly. Like, the planes are here, the airports are here, the pilots are here. Like, literally, just the airline going bankrupt just means that you have a change of shareholders. The shareholders used to be the people who bought shares, and now the shareholders are the creditors. That's it. Like, that's a change. So it doesn't mean the end of air travel. It doesn't mean any of this. It can, so it doesn't mean also that like all of the pilots are out of work or anything like that. That being said, I would say I'm less strident about the airline bailout than than others might be. I mean, in general, I don't think there should be a government, and so I don't think they should like be bailing out people and so on and so forth. But I would say that it is less scandalous than the bailout of banks, for example, in 2008, because you have the same time the government is forcing airlines not to fly. So if they're telling you like you're not legally allowed to do your job, to run your business, then that's like, okay, so if I can't do my business, you need to compensate me. It's kind of like, if your government does any mean domain and takes your properties, they have to compensate you for it. If they're saying like you cannot fly your planes. Now the argument is saying like, yeah, but it's kind of like what I was saying for the movie theaters. If even if the government didn't ban it, people wouldn't be traveling, and so since all the borders are closed, as a result, the airline would still be going bankrupt, and that's fair. And in that case, yeah, I do think that they should. I do think that they should not be bailouts. I just want to say that there are some sensible arguments for like why it's not just like a free gift for the government to the shareholders of airlines.
Yeah,
I worry that stock buybacks are going to be a casualty for this. And there's absolutely nothing wrong with stock buyback. I mean, there's nothing wrong with stock buybacks compared to dividends. And obviously, a business should be paying dividends. That's a reason for the business to exist. If it's not going to, or at least for the shares to exist. If the shares never pay dividends, the shares are worthless, right? You hold shares because either they pay dividend or because they might pay dividend in the future, or because the company might be liquidated or acquired and so on and so forth. But like at some point down the line, you have to return money to shareholders. And it turns out that in the US tax code, if you pay shareholder a dividend, you're taxed twice. And if you are doing a stock buyback, you're not taxed twice. And so when people say like, oh, and the stock buybacks and so on and so forth, that might happen because people are looking for a scapegoat, and that might be the scapegoat. And what it will mean is that, oh, well, it will be more expensive to pay dividends now to shareholders. It's just basically a tax hike, and it will be presented in a moral framework by saying like, oh, look, they were imprudent and so on and so forth. But no, all you've done is just a tax hike. I really recommend Clifford Asness' book on paper on the derangement against stock buybacks.
Yeah, it's bringing me back to business school when we had to do an argument on Walmart versus Amazon, and my professor was a little older and would not buy the argument to buy Amazon because there was no income, no dividends. And I mean, if you look at the chart on Amazon versus it was Amazon versus Walmart. If you look at the chart, obviously you get wrecked by not buying Amazon. But I mean, that's just a difference in like the professor was right, but on the flip side, they were wrong because they didn't make as much money. Like, you know what I mean?
I don't get that feeling. That thing is the exact this type of mentality is the exact reason why some people didn't see the pandemic coming. It's kind of like this very, very static mindset. It's saying like, oh well, look, there's no cases in the US, so there's no reason to worry. There's zero, there's 5 cases. 5 cases is not a crisis. And like, no, but look, it's growing. Look, you have this exponential growth. You have like both a mechanistic model and like and like some empirical data showing that there's a good chance that this might going to grow. It's like, well, I'll believe it when I see it. And so if you look at something like Amazon and say like, well, it doesn't pay dividends, so it doesn't have value. Well, it doesn't matter. Like, will it in the future? Like, can it? That's what you should be. That's what you should be looking at.
No, I'm with you there. I totally agree. And looking to the future, discounting it, they have the ability or the capacity to. That's what's important.
I had a few like single stock investment, and one of the one I did the best with was this New Zealand company called Xero. They do accounting software, and I remember they went public super early, and I remember reading at the time in New Zealand stock trading forums, and people were like, oh, well, this company is losing money, so why would you ever invest in it? And you're looking at their numbers, and like their user base is growing like crazy. Their users love the product, and so on and so forth. They're expanding in other countries, and you're like, well, sure, you can wait until they turn a profit, but if you do that, it's going to be too late. So that's a very, very strange mindset.
Oh, I'm totally with you. Yeah, you have to be able to identify these opportunities while there's misconceptions or while there's these disconnects. It's if not, you're just the dumb buyer at the end of the day. You're buying when the person who opportunistically bought is selling at the end of the day.
Yeah, but so just back to the point. It's like you do need to have some dividend at some point.
Yeah, no, I understand that. And Arthur, just closing out some quick questions. Just I want your opinion on the COVID virus, and I don't mean this to be sensationalist. I'm actually asking if you believe so. Do you think that this was something that could have been or possibly manufactured by some entity, good or bad?
So my initial, I'll stick to my initial take because it seems to be vindicated now. My initial take was like, no, so it's unlikely. And again, this is going to be stated, but this is with very low confidence because I am really not an expert in this. But I remember reading experts saying like this does not look manufactured. And I also remember this being like still very, very close to a virus lab. And so, I would say the story that makes most sense to me is that it did, I think it's still more likely that it just like happened to originate here. But there's also stories that maybe in this lab they're testing like existing viruses on some animals, and maybe there's like a confinement error, and then this thing gets out of the lab. So I would say like if it did come from it would be a big coincidence if it just happened to be next to a big like virus lab, but I doubt that somehow like this is something they engineer. I think it's more likely that they study a bunch of viruses and maybe one of them escapes. So that's a possibility.
Got it. That makes
I mean,
sense.
if it's a bioweapon, it sucks as a bioweapon. Like that's the thing. Like you don't want, if you're building a bioweapon, you don't want something that's going to like, kill kill only old people. Like you want something you want a good bioweapon. You want to give something that's going to give like diarrhea for a month to soldiers between the age of 18 and 40. That's like more effective as a bioweapon than something that's going to kill people around the world in nursing homes.
Yeah, it also feels like if it was a bioweapon, wouldn't the person making it want a cure for their people?
Yes, you also probably want to develop it, but I think it's possible. I mean, certainly they're probably studying coronaviruses in this institute. So who knows? But they're also studying them because they're endemic to the area as well. They're in China. They're around. So
yeah, that's fair. And Arthur, I think we've gone back and forth on Twitter with our love of sci-fi and movies. If I'm not incorrect here, and I think it was like Black Mirror and Love, Drugs, and Robots and a few others. How do you feel about AI? And I know there's probably a lot to unpack here, but is it something that directionally you're afraid of, or is it something that you think will benefit the world?
So I do buy I do buy the idea that there's AI risk in a sense that you can have a scenario where you have an AI that becomes more and more powerful very quickly, and if it's not properly aligned with human goals, then you end up basically losing the entire humanity. So I do think that's a possibility. Am I afraid of it? It seems the thing is like afraid is like a very emotional response, and I know this intellectually, but I don't I don't think it translates emotionally that well into me. I also think there's very little I can do about it. I know there's like initiatives to work around it, but it does seem like for me, it does seem like a almost intractable problem. And so, in some sense, it's kind of like, hey, this is very bad, but I'm not sure. I'm not sure a lot can be done about it.
Yeah, I mean it's weird to think about because it really does feel like if that were to happen, we still win because it's the next form of evolution, right?
Not necessarily, because if you have like an interesting AI which has complex goals and which turns the universe into like its own creation, does something beautiful and so on and so forth. So that then maybe that's great. Like we've moved on to something else. That's fine. But when you're doing this, you're already ascribing human values to this AI, and to use a famous example, maybe it end up just mapping the universe with paperclips and does something extremely boring with it.
I love that paperclip AI game online. I wish I could remember the name of it. But so you're of the opinion that we will get to a point where we have general AI or AI that can, understand complex risks.
I don't think there's anything magical about meat. So you have brains made of meat, and I don't think there's any reason why you cannot make brains out of silicon, and when you do, you can make them much faster than what they are. There's I would say this is an upper bound on the time it takes to get general AI, which is whole brain emulation. Like by the time you can completely simulate a brain in silico, then at that point you have general AI. And you can, this timeline is easier to predict because it mostly requires advances in manufacturing and the production of chips, and it's a little more predictable than what like advances we might have in theoretical AI, but it does put a bound. And I think that even being being conservative, it's going to put like a 40-50 year bound at most on this.
That's fair. And last question for you, Arthur. Do you think that in our lifetime we'll visit the planets? Do you think Elon Musk is going to achieve his goal of us actually leaving Earth in a real sense where we actually colonize other planets? Or do you think that it's unlikely?
I don't think there's a point in colonizing other planets. So I really don't see it. So there is some point in colonizing space. I think having some L5 colonies in space might make sense. But I don't know why you would want to go like near a big gravity well, like Mars, for example. What are you gonna like? You get some construction material, but you're better off, I think, like stripping it, like getting some asteroids and moving them near L5 and building near L5, than you are trying to go on Mars. I do think we'll explore space, but I think it'll be robots.
Do you think that because Mars is too close to the Earth, it just doesn't matter? Is that what you're getting at?
No, it's just that there's a lot of places on Earth which are not even settled by humans. So I think we'll settle the Antarctica before we settle Mars.
That's fair.
The main value of like going to Mars is basically like it's inspiring, it's beautiful, it gets people dreaming, and you can think of all these things. But like from a practical point of view, there's really no point in going to Mars. And the argument that somehow it's like, we're safer if we're a multi-planetary species. Again, I don't buy at all, because the main risk that we see as a species might be like rogue AI, for example, and being on a different planet is not going to stop that at all. So if like Elon Musk, you think that somehow, there's a big AI risk, then being on Mars is not going to protect you.
Yeah, the rogue AI robot could just shoot a nuclear missile from Earth to Mars at the end of the day if they don't like us.
Yeah, there's a lot of things they could do.
Arthur, this has been incredible. It's great to have on somebody who I look up to. I really appreciate your philosophical views on the space. I love how you think in extremes, and I love how you could just give such understandable metaphors about things that people could understand. So really appreciate your time coming on tonight.
All right. Thank you very much.
Hey, everyone. Thanks for listening to the podcast. If you enjoyed it, please support the show by hitting subscribe on iTunes, writing a review, or sharing this episode on Twitter and LinkedIn. And stay tuned for our next episode out soon.